Hi everyone, Uros Markovic here with the Real Estate District. Today is your Calgary market update for February 2026 using January information. And if you're taking one thing from this update, it is this: we are not in one market right now. Detached is behaving one way, townhomes are behaving another way, and condos are behaving another way entirely. So if you're buying, selling, or investing, the smartest move is to stop looking at one headline and start looking at the segment you're actually in. Let's break down what happened in January and what it means right now and how to position yourself as we head towards spring. First, citywide snapshot. Calgary reported 1,234 sales in January. That is down 15% year over year, but still very typical for January. New listings came at 2,785 and inventory rose to 4,391 homes. That inventory number matters. It is the highest January inventory level since 2020. Now, here's the key shift. Sellers were quick to bring listings onto the market, and buyers, especially in higher density homes, were more hesitant to rush back in after the December slowdown. That combination dropped the sales to new listing ratio to 44%. In plain English, buyers have more choice and urgency eased. The overall benchmark price for total residential came at $554,000. That is nearly 5% lower than last January. But the important context is this: we saw decline in the earlier part of 2025, and January appears more stable compared to the end of 2025. So, this is not a sudden drop happen all at once. It is the market continuing to sort itself, and the oversupply segment are pulling the headline numbers down. Timing also shift. Average days on the market was 53 days, up from 41 days last January. That tells us buyers are taking more time and sellers have to earn attention. Now, I want to move into property type breakdown because this is where the story becomes very clear. Let's start with detached. Detached remained the most stable segment overall. In January, there were 657 detached homes and 1,243 new listings. Inventory rose to 1,753 homes. Months of supply stayed under 3 months, and the sales to new list ratio was 53%. That is why detached still feels relatively balanced. Detached benchmark price in January was $724,000. That is slightly lower than the previous month and a little over 3% lower than the last year. But the detached pricing is not moving the same way everywhere. Some areas are holding up better, others are seeing more pullback. So, if you own a detached home or you're looking to buy one, the right question is not, is detached up and down? The right question is, how is my district and my price range behaving right now? Now, semi-detached. Semi-detached is also fairly balanced, but it will feel supply building compared to earlier periods. In January, there were 118 semi-detached sales and 251 new listings. The sale to new list ratio is to about 47%. Months of supply is about 3.5 months. Benchmark price is $667,000. That is similar to the last month and about 1% lower than last January. This is the market where pricing precision matters. No panic, no overconfidence, but precision. Now, let's talk row homes, townhouses. This is where the shift becomes more obvious. In January, there were 186 row home sales, down nearly 25% compared to the last year. Supply continued to rise and months of supply pushed above 4 months. Benchmark price was $421,000. That is similar to December, but 5% lower than last January. So, what does that mean? It means there are still buyers in this segment, but buyers are more selective. They are comparing more options, they are negotiating more, and they are not rushing unless the value is obvious. Also, in some areas, row homes are facing heavier competition from new home market. So if you're selling a townhome, you cannot ignore what builders are offering nearby, because buyers are absolutely comparing the two. Now, condos and apartment-style homes. This is the slowest segment right now, and it is the segment where supply pressure is the most visible. In January, there were 273 apartment condo sales. New listings reached 787. That pushed sales to new list ratio down to 35%. Inventory rose to 1,435 units, the highest level ever reported for January. Months of supply is now over 5 months. And pricing reflects those conditions. Apartment benchmark price was 301,000. That is nearly 1% lower than the previous month and 8% lower than last January. So if you are in the condo market, strategy matters a lot more than emotion. Now that we have covered the segments, let's translate this into real-world advice. First, sellers. If you're selling detached or semi-detached, you're in a more balanced environment than condos and townhouses. But buyers still have more choice than we did earlier last year. So you need to be priced correctly from day one, because the market is not forgiving testing the water pricing the way it sometimes was in stronger cycles. If you're selling a row home or a condo, expect more comparison and more negotiation. That doesn't mean you cannot sell. It means you need to position your home as the obvious value in your category. That usually comes down to three things: price, presentation, and the value story. For condos especially, buyers care about building and the numbers. Condo fees, reserve fund strength, upcoming repairs, and how the unit compares to other available options. So, the listings that win are the ones that feel clean and clear from the value standpoint. Now, buyers. If you're buying condo or a townhome, you likely have more leverage than last year. More inventory means more options. That can translate into a better negotiating power and more ability to be selective. But you still need discipline. Make sure you're reviewing the condo documents properly. Understand the full monthly cost, not just the mortgage. And negotiate based on actual comparable sales, not hope or headlines. If you're buying a detached home, it is more balanced. Some homes will still move quickly if they're priced correctly and show well. So your advantage is preparation. Know exactly what you're looking for, know your financing, and know when to move fast versus when to negotiate. Now, investors. This market is becoming more deal by deal, especially in the condo space. If you're investing, focus on fundamentals: realistic rent, stable condo fees, strong building financials, and a healthy reserve fund. Because something can look cheap on price and still be expensive to own. Before I wrap up, a quick note on the surrounding markets. Calgary saw 106 sales and 227 new listings. The sale to new listing ratio was 47%, with months of supply just above 3 months. Benchmark price was 514,000, showing a modest seasonal gain, but still about 5% lower than last January. Cochrane saw new listings rise to 149, the highest January ever reported. Sales were 54. The sales to new listing ratio dropped to 36%, and months of supply set at about 5 months. Benchmark price was 551,000, 2% lower than both December and the start of the last year. Okotos continue to run tighter because inventory is lower than long-term trends. January reported 33 sales and 52 new listings, and the sale to new list ratio was 63%. Inventory was 79 units. Months of supply stayed just above 2 months. Benchmark price was almost 600,000, about 2% lower than the last year. So here is the bottom line for February. Detached and semi-detached are closer to balanced. Row homes are more competitive with rising supply. Condos are the most supply-heavy and negotiation-friendly segment. If you want a plan tailored to your situation, give me one word: buyer, seller, or investor, and tell me which community you care most about. I will reply with a simple strategy and realistic price range for your segment. No pressure, just clarity. If this update helped, please like, subscribe, and share it with someone who is watching the market right now. I'll see you in the next one.